But let's take a look at some stocks here. Again, that's our bread and butter. That's what we like to look for is good value investments. Again, it's hard to find good investments right now with everything being overpriced. There are still some out there, but it just seems like show after show is like, gosh, that one's not good. That one's not good. But let's see if we got one today. First one we're going to look at today is a company by the name of Compass. They are the brokerage giant in the real estate space. They just announced plans to take over rival Anywhere, and you might not recognize the name Anywhere, but is the parent of Century 21 and Coldwell Banker for $1.6 billion in an all-stock transaction. So Compass, I mean, I've seen the CEO on before. He seems to be pretty knowledgeable. I like what he has to say. But the one thing that worries me about this space, I would say, is, the competition from the likes of, like a Rocket Mortgage. I just think people shifting towards that tech space and bring up Rocket Mortgage because they bought Redfin. Are they going to be able to digitize more of the real estate transaction? And that's not going to be for everybody, but it's still a growing base, might be enough to eat into profits for a company like a Compass, which is why you might be seeing this type of consolidation. But looking at the numbers here for Compass, their ticker symbol is COMP. No price to earnings, so not a good start there. Price to sales, 0.7. That's appealing considering the industry average is 2. Price to cash flow, 25.9, so that's substantially above the industry average of 15.2. Looking at earnings growth, nothing there as there were no earnings. Sales growth over the last year, though, up 21.2%. Obviously, we had seen a very challenging real estate market, so maybe they will benefit just from increased transactions. Obviously, that could be a benefit to Compass as a business. No dividend. Balance sheet doesn't look bad. Current ratio is 0.7. Debt to equity, 0.8. Looking at the current price, though, $7.95. 52-week low is $5.10, and the 52-week high here, $10.25. Now, if we go forward for Compass, I believe they do report on a calendar year, so we go to December 2026. I see estimated earnings per share is 17 cents. Gives a target sell price of just $2.82. So, I think this is one that you could see some growth in the earnings and growth in the sales. I mean, if you look at the earnings estimates, just kind of going out a few years here, earnings are estimated to be negative this year. Then you see that flip to 17 cents, as I mentioned, and in the following year, 33 cents. So the hope is, this company could profit off of a return to maybe normalcy in the real estate market and just kind of higher transaction volume.
Yeah, and I mean, is part of that, with acquiring Century 21 and Coldwell Banker and with the purchase of Anywhere, that's an interesting name.
I know.
But I mean, it seems like, they kind of got to get the synergy lined up and be a bigger brokerage and, hopefully get their costs a little bit under control, and then, that can increase their margins and work out for them. But it'll be interesting to see what happens with, the real estate transaction space over the next 10 years, I'll say. Same with like mortgages and the financing of houses. With so much tech-enabled stuff going on, I mean, is selling a house worth 6%? Worth 5%? I mean, that's the only... when you break that down and compare to like mutual funds used to have loads where you would, have a fee to buy them.
Yep.
But with the, advancement of technology, different people are able to buy things quicker. And so a lot of those costs have gone down. So I wonder if that's, something that we'll see with the brokerage space on real estate as well.
That's the exact example I was thinking with the advancement of like ETFs, right? Mm-hmm. That has had to cost a lot of these mutual funds management fees because they've had to lower their fees to compete against it. Now, real estate, I don't think has really gone through anything like that. And I could be totally wrong, but, I think...
That's where, was it last year where, because usually, you sell a house, you have the commission, and then that commission pays the buyer and the selling agent fee. And now with that whole thing last year about trying to unwind that. So, we're starting to see some of that, and I could see things like that continuing to go forward. Maybe that is helpful or not in the grand scheme of things, because if you don't have somebody who's really representing you as a buyer, you're buying a huge asset, it might be worth 2% or so to get that representation. But so many people are fee conscious where they might be willing to give up some of that representation for a lower cost.
Yeah, no, it's going to be interesting. And I don't know how, if you're looking at this space, right, you're going to want to understand those intricacies, because a company like Compass, now their market cap's around $4.4 billion. they're buying now anywhere for $1.6 billion. If this space slows and this transaction comes out to be a bad deal, obviously, you don't want to be a part of that. You could have just wasted $1.6 billion on this transaction when, again, a company like, I'm going to use Rocket as an example. Again, when they're buying Redfin, they're taking a totally different approach. They're saying, I think we can implement more tech advancement.
Right.
And again, I don't know Compass's business inside and out, but I think they're leaning more into the human capital element. So that is something that I think you're going to have to take into consideration. I definitely don't think I'd buy Compass at these levels. I thought maybe there'd be some potential there on the value side, but gosh, yeah, valuations still look pricey on Compass to say the least.